From Deloitte Tax, welcome to the Tax News and Views podcast. In this series, we talk to specialists from Deloitte about the latest business issues and developments. I'm Carrie Falkenhayn, your host for Tax News and Views, and today we're going to discuss the State of the Union address and any implications for tax policy. I'm happy to introduce two guests today for this special edition. We have John Traub from Deloitte's Tax Policy Group, who you have likely heard on these tax policy updates in the past. And joining John is Anna Taylor, who recently joined Deloitte's Tax Policy Group. Welcome, both of you, to the podcast. Anna, before we get to the State of the Union, you just joined Deloitte last month. Tell us a little bit about your prior life.
I did. Thanks for having me. I'm excited to be here. I'm about 4 weeks in now. I came to Deloitte from the U.S. Senate, where I've spent the better part of the last 2 decades working on tax and economic policy. I started my Senate career working for my home state senator from Arkansas, Senator Blanche Lincoln. And then I moved over to work with the Senate Majority Leader, Chuck Schumer, starting in 2012. And I've been with him ever since, advising both the Majority Leader and the setting the economic policy agenda for the Senate Democratic Caucus.
Terrific. Well, we are thrilled to have you as part of the team. So my first question is around the budget, and we noted that the president missed a statutory deadline, which was Monday, to submit his budget to Congress. Is that a big deal, Anna?
It's really not a big deal. It's true that there is the statutory deadline, but presidents of both parties routinely miss that deadline and end up submitting their budgets within a few weeks to a month or so later. So there's no penalty for doing so, and we expect that we'll see the budget by early in March. The date that we've heard is March 9th, so it'll be here in a few weeks.
Got it. And John, tax was not center stage at the State of the Union, but it got a few mentions. What was the president proposing?
Yeah, there were 3 tax proposals he talked about explicitly, and one that came up kind of implicitly. Implicitly, he said he would likely raise taxes on big corporations and the wealthy to pay to extend the solvency of Medicare, since he promised he would extend Medicare solvency without cutting benefits and without raising taxes on those with incomes below $400,000. So basically, whoever's left is going to be upper income individuals and businesses. 3 tax policies he specifically cited being in favor of. One is the child tax credit extension. That we've known for some time is key for Democrats to unlock other business tax items like 174 expensing. He called for quadrupling the excise tax on stock buybacks. That's something that Anna worked on when she was working in the Senate last year. A 1% excise tax on stock buybacks started January 1st. We've already seen a number of companies announce buybacks in January. And so the president proposes now a 4% rate on stock buybacks. And then he renewed his call for a minimum tax on upper income individuals, which to me is interesting, not because it's a higher tax on the wealthy. That's sort of part of the game plan most Democrats have long followed. But it's structured as a tax on both realized and unrealized income. And I think 3-4 years ago, the idea of taxing unrealized gains was relegated to a fringe part of the Democratic Party, like a Bernie Sanders or Elizabeth Warren, who really were aggressive in thinking about how to tax the wealthy. And now we see it as a sort of central part of Democratic policy firmament, as we're going to change the whole notion of how we tax from going realized gains to unrealized gains.
Well, that would be a very interesting development, but we've got divided government right now, and we tend to think that proposals of this type are more just talking points that are really dead on arrival rather than precursors to actual legislation. Is that true here?
I think it's certainly true of the minimum tax on wealthy individuals. That seems to be more of a talking point than a real policy proposal. The child tax credit expansion and extension certainly seems like it remains a necessary precursor to acting on 174 and other business tax items. And I think we see a new chairman of the Ways and Means Committee, Jason Smith of Missouri, who's at least open to some ideas here that maybe his predecessor in the role, Kevin Brady of Texas, probably would not have been. So I would not call that one DOA. And then I think the one to really keep a close eye on is this higher minimum tax on book income. As Anna can tell us, a 4% rate probably loses revenue because you get the rate high enough that companies no longer do stock buybacks. But there's some number between 1% and 4% that would raise additional revenue. And if you watch the reaction from Ways and Means Chairman Smith, he didn't specifically criticize this proposal. Some of his colleagues did. I would watch him very carefully. It would not shock me entirely if he was open to the idea of a higher tax on stock buybacks if he could use the revenue for something he wanted to do, i.e. tax benefits for low-income families, farmers, small businesses. So I'm not saying he's going to run out and embrace it, but if we get into the position of horse trading later in the year, I could see this as being the kind of thing Republicans might ultimately embrace. They are no longer a party that really is thought of as being in the beholden to Wall Street. It's much more of a Main Street party.
And Jen, remind us, we're not in a budget reconciliation era. What needs to take place for tax legislation like that to pass, actually?
Yeah, a really important point, Carrie, is last year, again, when Anna was still working in the Senate, they were operating under budget reconciliation for part of the year, which allowed them to pass certain qualified tax and spending bills with just 50 votes, plus a tie-breaking vote of the vice president. With us now working in divided government, the odds of the chambers agreeing on a budget resolution, which unlocks budget reconciliation, approaches 0%. It may actually even be below 0%. So anything that passes Congress on any topic, whether it's tax, spending, foreign policy, education, energy, all that's going to have to be done with at least 60 votes, meaning there's going to have to be at least 9 Republicans if all Democrats stick together in the Senate. So you're really operating in an environment where there's much more need for bipartisan cooperation than there was last year.
That's helpful. Thank you for that. Anna, the next must-pass bill is the debt limit. So maybe share with us the latest on that issue and what we should be watching for. I know there are folks that are hopeful that that could be a fix for the Section 174 rules. So maybe you could comment on that as well.
Sure. So Secretary Yellen announced that the debt limit was reached in January. And so Treasury is now in the process of exhausting what they call extraordinary measures to continue meeting the obligations that they have to meet. So, they can do that for a few months before we truly run out of room on the debt limit. It's expected to, the extraordinary measures are expected to last for the next few months. So it's still too early to say exactly how long. Treasury is currently estimating June will be the drop dead date, but it could move forward or back depending on how revenues come in over the next couple of months. I think at the very latest, it's likely that by late summer, something will have to be done here. So, House Republicans have made pretty clear that they're going to need budget concessions to help with any debt limit increase this summer. And Democrats have been pretty clear in saying that the debt limit is the responsibility of all involved, and that an increase is not negotiable or conditional, and that you really don't need to have any sort of concessions to do what has to be done for the good of the economy. So if you look at the last several increases, they've all been clean, and that's happened under presidents of both parties. So with that said, President Biden has had conversations with Speaker McCarthy in recent weeks where he has indicated a willingness to have a separate conversation with House Republicans on some sort of budget, which is a positive sign in terms of ultimately finding an outcome here. But President Biden and the Senate Majority Leader Schumer and Senate Minority Leader McConnell have all expressed that if the House Republicans want some sort of budget concessions, then they need to be the ones that put a plan on the table to start the conversation. So it's going to be really interesting to see what comes out of the House Republican caucus over the next several weeks in terms of a budget proposal. As we mentioned up top, there will be a White House budget that is released in March, and those two will be really the first meaningful substantive step in the process of a negotiation. So, I'm looking at, can House Republicans put together a spending plan that can receive 218 votes in the House? Can they, do they have a majority in the House that even all agrees on the same thing to put forward as a plan? How long will it take them to go through that process to figure that out amongst themselves? We ultimately are going to run up against the deadline here of late summer where this has to be resolved. And then, while you've got that process happening in the House and in the administration, you're going to have Senate leaders, Schumer and McConnell, who have dealt with this a number of times in recent years and have done so with, fairly little drama or danger to the economy. They're waiting and watching. And if the House falters and the Senate has to step in to figure out a path forward, I think they'll be ready to do so. So we'll see how that all plays out over the next few months. Whether or not there is an opportunity to include a tax package in any sort of deal is, I think, still really up in the air, and it's too soon to know. There definitely will be folks on the Hill who would like to see a revenue package included, and I think it's possible, though it's definitely too early to say that that's likely.
Well, that's helpful, and it doesn't seem like any resolution to or change around the mandatory capitalization of 174 costs is going to be forthcoming very quickly. So thank you for that. Well, and thank you both. Great to talk to you, Anna. So nice to have you as part of the team. I look forward to talking to both of you when we have the next wave of activity for tax policy. It sounds like it'll be sometime next month. But in the meantime, if our audience would like additional information, you can subscribe to an email version of Tax News and Views that comes out weekly on Deloitte.com. You can also connect with John and Anna directly via LinkedIn. And I hope you tune in here for future policy editions. In the meantime, thank you all for joining us. I hope you continue to be well.